Hey guys, welcome back to my channel. Now we are going to discuss series on standards on auditing from 200 to 265. First is SA 260. 260 is communication with those charged with governance and management. Effective date, it is come on 1 for 2010. Okay, those deficiencies which is identified during the audit is communicated by auditor to management or TCWG. Management and TCWG. Okay, here is not any this has not impose any additional liability to auditor. Auditor identified some misstatements or deficiencies in internal control during the audit. That deficiency is communicated to management through letter of weaknesses. Okay, here is one way communication. Letter of weakness is communicated by auditor to management or TCWG. He is said in this letter the weaknesses in internal control and clearly indicate that this examination is not been the design to determine the internal control for the management purpose. Okay, and these weaknesses come while he determine him nature timing and nature timing extent, and he serves significant means that if those misstatements or those deficiencies are not corrected timely, then there may be arise a legal liabilities or events which may due to this default which may cause loss to the entity. Okay, and indicators of significant deficiencies: if there is ineffective risk assessment process, if there is ineffective response to identified risk, control ineffective, there is control exists but ineffective, not operating effectively, or prior period misstatement which is still uncorrected, or any misstatement which is communicated by auditor to management and management is not take any action regarding this. Okay, these all are the matters which indicates the significant deficiencies may ineffective risk is significant deficiencies. Indicators indicate that there may be significant deficiencies in the entity. Okay, now we are on asset 260. Asset 260, communication with those charged with governance. Effective date is 1 for 2017. Okay, management. Okay, the here two-way communication. Auditor communicate with TCWG regarding some matters, and TCWG also communicate the auditor. Okay, so that auditor, it will be helpful that while auditor prepare and plan for audit, for understanding the entity and its environment. Okay, so here is two-way communication, but one thing is here is that the management liability is as it is. Management will not say that if auditor communicate this matter to TCWG, so our liability is reduced. If we are not communicate if auditor communicate to TCWG this matter, then we are not communicate this. No, this is not like this. Management should also communicate with TCWG. Management liability of management is not reduced. Okay, so objective two-way communication benefit is that help in obtaining the sufficient appropriate audit evidence. TCWG is communicate regarding the environment of the entity. Okay, and how oversee procedure is applied by the TCWG. Okay, and it is a positive relay, it is assist and developing a consistent constructive positive relation between the TCWG and auditor. Okay, matters communicated by auditor to TCWG. Auditor view about the entity's accounting practices, entities accounting policies, accounting estimations, financial statement disclosures, and during the audit, if auditor is face some significant difficulties because the management is not assisted the auditor, significant delays to provide the information, and unavailability of this some expected information, unexpected efforts to obtain the sufficient appropriate audit evidences, unexpected brief time given by management to auditor for completion of audit. and management will not assist to, if management is not assist to auditor, then auditor communicate this matter to TCWG. Okay, these all are the matters which are communicated by auditor to TCWG. Okay, circumstances affect the form and content, etc. There is no fixed format. Okay, in listed entity statement regarding independence, if there is a listed entity, then auditor also communicate with TCWG and a statement regarding independence of his, independent of firm, and independent of engagement team members. Okay, as per asset 2, they also write in this letter that they comply the asset 200 requirement of independence, and clause 4 of part 1 of second schedule regarding the if the auditor have substantial interest, then not take the audit, and also companies act provision is also comply here. This always right by the auditor to TCWG. Okay, if there is any threats on independence, then eliminate or reduce that threat. Communication process may be written, maybe summary, maybe oral, maybe detailed. So here is structure, unstructure, any type of, there is no any fixed format actually. Factors affect the mode of communication: size of entity, operating structure, legal structure, uh, discussion of matters include in calm matter. Paragraph की audit matters is satisfactory resolve or not. Management previously communicated this matter or not. Legal requirement regarding communication. Okay, they may agree how periodically they communicate, periodically or monthly or quarterly. They may decide these all things by taking a meeting or by agreement. In a meeting by agreement, if there is a governing body which is changed, then also communicate to auditor. And a special purpose audit, then this is also, I think they write that it is a special purpose, it is a special purpose audit, etc. Okay, so this all about asset 265. Now we are on asset 250, consideration of law and regulation in an audit of financial statement. Okay, so here first responsibility to comply the law and regulation is of management. Okay, management prevent, detect the non compliances, and firstly management identify what is the legal liabilities on its entity. Then auditor, management also ensure that, then auditor come and ensure that the management is, how management is identify, how management is comply the legal liabilities, the all employees are follow the process or not, all code of all employees follow the code of conduct or not. Okay, auditor duty in two different circumstances. First circumstances is that where the law and regulation is directly affect the financial statement, or second, if the law and regulation compliances is not directly affect the financial statement. For example, if there is a tax provisions which is directly affect the financial statement, but if there is the child labor law or wages salary law, any this type of law, then they are not directly affect the financial statement. But if there is any non compliances, then penalty prosecution will imposed on the management or on the entity. So if there are non compliances, then auditor see the amount, or then auditor take into consideration this matter. But in the first case where tax provision etc, then if compliances or not, this things is taken consideration while doing audit. Okay, so here indicators of non compliances. First is investigation imposed by any authority, adverse media comment, penalties levied on entity, unusual payments, legal payments, unusual retainership fees, unusual transactions on the which concerns, which is in unusual transaction with the concerns which is in tax haven area or SEZ, or payment for goods and services in those country those originated other than those countries which is originated that goods. Payment without proper exchange control documents, unauthorized inappropriate records transactions, access agent fees, or purchase below market price or below arm's length price, payment for unspecified services, unusual payments in cash or in personal expenses. No sufficient audit trails existence of internal system which is forced to prove the audit trial. These all are the indicators which shows that there may be any non-compliances. Okay, then asset 240, auditor's responsibility relating to the fraud in an audit of financial statement. This essay is common 1 for 2009. Okay, fraud is intentional act to gain unjust or illegal advantage. Okay, sources is financial reporting framework, misappropriation of asset. In financial reporting framework, there may be a fictitious general entries is entered, or show more profit in general meeting, or show less profit in tax towards the tax authorities, manipulate the appeal, manipulate operating results, inappropriate assumptions taken by the management, inappropriate judgments taken by the management, facts conceal which is affect the financial position, and transactions which is unusual or which alter the amounts, and incomplete, unstructured, intentional made, self made transaction, and subsequent transaction which is not included, the effects of subsequent transaction which is not given in the financial statement, disclosures are not proper and delayed on the recording of the subsequent transaction, misappropriation of this all are regarding the inappropriate, this all regarding the financial reporting framework. The next is misappropriation of asset. Misappropriation of asset is pay for those goods and services which are actually not acquired by the entity, or steal some assets from the entity, steal some assets of the entity, use the assets for the personal purposes by the employer, by the employees, etc. Then reason is expected earning target obligation. Reason for fraud, expected earning target, they set their own expected earning target. For fulfillment of that target they are doing the fraudulent activity. Then incentives or pressure. Then personal financial obligations, opportunity to do so. If internal control is weak, the person is in position, he or she is easily break that internal control, or rationalization of behavior, he is habitual to do this type of frauds. Okay, so these all are the reasons which emphasize any person to do the fraudulent activities. Then primary responsibility rests with management. Obviously primary responsibility to find out the frauds etc is of management. Okay, as an auditor our responsibility is how the management identify, how management respond, what is the communication between the management and other employees regarding this, what are the practices adopted by the employees, what are the communication between management and tcwg, and what is the management attitude toward this aspect. Okay, risk of non detection of fraud, inherent limitation of control, inherent limitation of internal control, inherent limitation of audit. So it may be possible that we are not able to detect the fraud if the fraud is management fraud. Okay, so it is very difficult to find the management fraud. because the management is in the position of trust. He is easily manipulate the figures. He has authority. He can alter the figures. Auditor's duty throughout the audit: follow the professional skepticism, provide the written representation, and management should provide the written representation. Fraud assertion: written representation must be consistent with the other evidences. If written representation is inconsistent with the other documents, then there may be fraud. So auditor, if there is possibility of fraud, then auditor should apply the further audit procedure, additional audit procedures. Okay. And if the auditor found the fraud, then information inform the person who appointed for communicate the who is the person, those authorities, those regulatory authorities, where law and regulation is says to inform that authorities in ADT 3 form. ROC, auditor may go for may withdraw from the engagement, but if there is a company and if auditor want to withdraw from the engagement, then auditor file ADT 3 form to ROC regarding the reasons of resignation. Auditor is not directly say that there is a fraud, but auditor is communicate that there is some possibilities regarding the manipulations, etc. Okay. And in Caro 2016 para 3 clause 10 apply some specified companies where fraud is also reporting regarding the fraud in para 3 clause 10, or in 143 subsection 12 auditor should communicate if fraud is greater than 1 crore, then communicate to central government within 60 days, 45 days plus 15 days of the board of directors reply. And if fraud is of 1 lakh, then communicate to audit committee, etc. within 2 days. Okay, this is all about the essay 250. Now we are on essay 230, audit documentation. Audit documentation come in 1 for 2009. Meaning is records and procedures adopted and comply the law and regulations. Documentation, records. Purposes of audit documentation: before audit, they are assist in planning and performing the audit. After audit, future evidences and for future evidences. Internal, while doing the EQC review process, etc. And external, who dated, who doing, who review, this all are thing. Okay, where the documentation is helpful for the auditor. Then form and content. Form, content, extent, there is no any standard format. There may be auditor kept 2 files: current audit files, permanent audit files, which is useful for all type of audits, year next year also, and current audit file which is regarding this particular assignment. Okay, so it may, and this is an administrative process, so auditor should keep this file 7 years minimum. And factors affect size, nature of entity, risk of material misstatement, exceptional situation if arises, nature of procedures, evidence obtained. Then ownership of the documentation, most important. In SQC 1, it is clearly says that the documentations, working papers are the personal property of the auditor. This is property of the auditor. Okay, ICAI in board of ICAI in other circulars also says that auditor is not bound to give these working papers to branch auditor is not bound to give working papers to head office auditor. Okay, there is any alternate procedure is like the head office auditor give checklist or questionnaire to branch auditor, and branch auditor can fill up this questionnaire, but it is not necessary that branch auditor is give is working papers to head office auditor, if a head office officer is demanding this. Then asset 200 and clause 1 part 1 of second schedule is also says about the confidentiality. So law and regulation is provide the extract if there is any law and regulation which is permit, and the auditor want, or if auditor want to give the extract regarding this, then auditor can give, but this is no duty the auditor should give the working papers to others. Okay, so here exclusive. Okay, this is all about essay 230. Now we are on SQC 1 and essay 210, if I'm not wrong. Then this is essay 201. Essay 200, 210, 20, essay 220 and SQC 1. Quality control for the, okay, SQC 1 is quality control for firms that perform the audit and review and other assurance and related service engagement. And asset 220 is quality control for the audit of financial statement, effective date 1 for 2010. Okay, asset 220 is leadership. One engagement partner who take responsibility for the overall quality control of audit. Relevant ethical requirement is integrity, objectivity, professional behavior, professional judgment, independence, confidentiality, or proper due care. If there is non-compliance arises, then engagement team discuss regarding this matter and take an appropriate action. Independence from mind and appearance. Acceptance and continuous lack of integrity, unable to provide the quality services. Integrity of management, sufficient capabilities. Assignment of work to engagement team and human resource. The first point is independence. The second point is assignment of work according to their ability. Engagement partner should provide the work to engagement team according to their capabilities, and human resource management at the firm's level. Then take the help of the expert if required. Okay, engagement performance. So firm policy procedure should adopt while doing audit. Direction, supervision, performance. Deal with this all. Direction is given. Supervision, that means according to firm's policy procedures, do the work, and performance. If non-performance, then take appropriate action. Then SQC reviewer. SQC review, sorry, EQC reviewer process. This is our engagement partner make sure that the listed entity appoint any reviewer for the EQC review procedure and dated his report. Whom dated the report? Here, audit partner should dated his report after the date of the EQC reviewer's auditor's report. Okay, so you see the proposed audit report after completion of the review audit report is dated. Other documents, significant matters, how deal with this matters, so check this all. EQC reviewer is check the how deal with matters, so what is the matters, how documented the matters, significant matters, etc. Then the audit partner monitor the all the regulations that make and operate effectively or updated accordingly. Okay, so if they make the firm's policy and procedures, they can change the policy and procedures accordingly according to the circumstances. Okay, this all is about, and monitor they are following or not. Okay, this all is about SQC 1 and asset 220. Now we are on asset 210. Agreeing the terms of audit engagement. FRF is in preparation of financial statement. Internal system is acceptable or not. Prepare financial statement according to the financial reporting framework. Obtain the acknowledgements from the management responsibility and prepare the financial statement, exercising the necessary internal control by the management. Then understanding between the auditor and the management terms of audit, that is letter prepared by auditor and give to the management that what is the object, scope, responsibility of auditor, responsibility of the management, identification of the applicable FRF, and references to the expected form and content of his report. And other contents is like applicable prior applicable pronouncement legislature on that entity, facts that inherent limitation of audit, inherent limitation of internal control, or arrangements they are made, planning, performing, composition of audit team. These all are the matters which are communicated by the auditor to to management in letter of communication. This is not letter of weakness. Huh? So revisions or remind this letter while in recurring audit it is not necessary, but sometimes it is necessary where the change in audit team, change in management, change in terms of service, change in senior management, change in legal framework, change in FRF, change in other reporting framework, significant change in ownership of the entity, change in nature and size of the entity. If management impose limitation on the audit, then not accept the audit. If prior to the audit management impose limitation, then not accept the audit. If during the audit manager impose some restriction, then auditor may withdraw from the engagement if law and regulation is permit. Okay. Asset 200 overall objective of independent auditor. Financial statement, obviously objective is give conclusion on the financial statement. Opinion, and also says that it is opinion, not high level. It is high level of assurance but not absolute level of assurance. Okay, the financial statement are prepared as per FRF or not, financial statement are free from fraud and errors or not, requirements, ethical requirement, integrity, objectivity. Okay, and confidentiality, conduct audit as per the standards on auditing, professional skepticism, independence from professional judgment, nature, time, extent of audit, and procedures, material, the level, management, materiality level. Okay, obtain sufficient appropriate audit evidences, reduce risk. These all are the matters where auditor is right that ethical requirement, professional judgment, professional skepticism, materiality level is decided by the management. This is also materiality level is decided by the auditor. This is also auditor's own judgment. Okay, this is all about SA 200. This is all about within half an hour we complete our standards on auditing from 200 to 265. Okay. SA 315. 315 is come on April 1, 2008. Identify and assessing the risk of material misstatement through understanding the entity and its environment. Risk is arises when internal control are not effective. Internal control is imposed by management or TCWG for reliability of reporting information, for safeguarding of assets, for effective and efficiency of the operations which is done in the entity, and compliances with all law and regulations. Then risk is that what can go wrong, and likelihood of misstatement, possibility of multiple misstatement at financial statement level or at assertion level. Then procedure is inquire from the management, observe internal control, analytical procedure can apply it. Understanding the entity and its environment through management. Here, in understanding the entity and its environment, auditor should see or check the management competence, management integrity, management operating style, participation of TCWG and supervision, technique of TCWG, what accounting principles applicable and change from previous year to this year, investment securities, financial structure of debt equity ratio, and ownership structure is also checked by the auditor for understanding the entity and its environment. Evaluate the assessment of risk of material misstatement at financial statement level for completeness, completion, Cutoff procedures, accuracy comparison, and at a assertion level, valuation, rights, obligations, existence of transaction, etc. And at disclosure level, all like completeness, accuracy, valuation, rights, obligation, everything. Okay, so areas should be examined in CIS environment, program developed and maintained proper or not, processing and programming proper or not, software, system software is supportive or not, then control over the access and utility program, operating procedures, physical security, component of internal controls, control environment, risk assessment, control activity, information system, and monitoring. In control environment is like management integrity, HRC policies, authorities, responsibilities, then risk assessment, then control activities, then information system is input output and process is right or not, then monitoring is new technology and change in personals, expansion, new personals is appointed, change in technique, amalgamation, merger, corporate restructuring, etc. um, there is no any technique which is 100% automated. Manual intervention is everywhere. So expect an actual if in monitoring if there is any difference between the expected and actual result, then management is taken by action is taken by the management. If action is taken, it is appropriately taken. These all are the things which is checked by the auditor in the 315. Okay. Specific risk for if there is IT system, then a specific risk is unauthorized access of data, inaccurate process data, inaccurately respond, inaccurately record the transaction, inaccurately process the transaction, unauthorized change in master file, system program inappropriate, manual intervention, if a personal gain by the employees management, etc. These all are the threats. Now we are on asset to 320, materiality in planning and performing of the audit. Concept of materiality, auditor's own judgment. Below this, the materiality is the decision. Concept of materiality level is decided by the auditor. This is the auditor's own judgment, and while deciding the materiality, auditor should check how it is affect the users users as a group. Where we decide the materiality, we think the users as a group, not individual user. Okay, factors considered is size, nature, circumstances in a planning, and while we are planning, exclude the. Okay, performance materiality is where the at a level, if materiality level is decided by the auditor, but during the audit, practically auditor is check below the level of materiality, below the um, transaction which is below the materiality level is also checked by the auditor in any circumstances. This is the performance materiality. Okay, then undetected, uncorrected misstatement is collectively make a big misstatement. Okay, revenues. Okay, then need to decide the materiality level. Then we decide what the risk assessment procedure for further audit procedure will apply to conclude the audit. Then relationship of materiality and audit risk. Risk of material misstatement is equal to control risk plus inherent risk, or total risk is control risk plus inherent risk plus detection risk. Control is applying but unable to prevent the material misstatement. What is the control risk? Control is there, but they are not able to prevent and detect the misstatement. Detection risk, unable to detect the risk of material misstatement because of the inherent limitation of audit and inherent limitation of internal control. Even they apply the all procedures, but they are not able to detect the misstatement. Then uh, control risk, inherent risk, and detection risk. Inherent risk is the control are not there, then inherent risk. Control risk is control are there but they are not effective. And detection risk, they apply all procedures but unable to detect, is detection risk. Audit risk increase then materiality level is decrease. Benchmark. As per SS 200 is also said that the benchmark is decided by the auditor. It is auditor's own judgment, auditor's professional judgment. So ownership of entity, finance by debt or equity. If more by debt rather than equity, then claims on the earnings are more. So risk is more. Okay, so benchmark to decide the materiality is like voluntarily check the revision of voluntarily check, then finance by equity or debt, ownership of the entity, etc. Then revision of maturity level, if there is change in planning, if unusual circumstances arise, if complex transaction is arise, if there is any other circumstances where the materiality level is not appropriate, then it is revision, then they revise the materiality level. Okay, if maturity level is revised, then performance maturity level is automatically revised. Not automatically revised, should also be revised. Okay, then I say 330, auditor's responsibility of assess the risk. 1 4 2008, effective date is 1 4 2008. There is two type of procedure. First is compliance procedure and the second is substantive procedure, where the test of control depends on substantive procedure is test of detail and compliance procedure is test of control, that is controls are exist or not, if exist then effective or not. Okay, or evidences regarding the internal controls exist or not and effective or not. Then test of detail is assertion level, that means detailed checking, asset size, liability side, etc. Test of detail and substantive analytical procedure is comparison, ratio analysis, etc. Then compliance of both test of detail and test of control are the effective process for for obtaining sufficient appropriate audit evidences. At the year end period, see the adjustment entries for outstanding advances. Okay, then 505 external confirmation is also a part of the substantive procedures. Mm. If apply the substantive procedure on internal interim period financial statement, then apply the FAP, further audit procedure, or combination of further audit procedure and risk assessment procedure. Then test of control is perform inquiry, how entity apply the internal control, by whom internal control are applied, consistently with which they were applied the internal control, evidence obtained in previous and control are not changed, then procedures apply on every third audit. For some procedure always apply sampling or control change from previous year to this year, then all the test of control and compliance procedure will apply. Some procedure apply if controls are previous year and this year are same, and if they already apply the procedures while checking previous year's figures and there is no any change, then no need to apply. But if there is change, then apply all the procedures of test of control and test of detail. Factors warrant retesting: deficiencies, control environment, deficient monitoring, deficiencies in general IT control, personal changes that significantly affect change the application of control, significant manual elements. Matters of misstatement is pervasive at financial statement level, but misstatement at assertion level is um, then give the modified opinion. If unable to get sufficient appropriate audit evidence, then if modified opinion, if not pervasive, or disclaimer of opinion if pervasive. As a 450, evaluation of misstatement identified during the audit. In 315, you identify the risk of material misstatement. 330, you respond to those risk of material misstatement through compliance substantive procedure. In 450, evaluate the risk of material, evaluate the effect of those material misstatement. Causes like inaccurate data gathering process, inaccurate data processing, omission of disclosures, management interpret the fact and figure inaccurately, unreasonable judgments, inappropriate policies, accounting policies are inappropriate. Auditor duty is to cumulate all misstatement if they are trivial or other than trivial. If trivial misstatement, then auditor may not be communicated and may not be cumulate. But cumulate or misstatement if they are big misstatement, see the effect of those misstatement, change the plan and strategy accordingly, and apply the additional procedures as well. Communicate this misstatement to management, take corrective action, then then communicate to TCW. If management is not take corrective action, then communicate to TCWG. If management take corrective action, then apply additional procedure to see that actually management actually the correctiveness is correct or not. Management refuses, then also communicate TCWG. Communicate the misstatement to management. Okay, if management is apply the procedures and misstatement corrected timely basis, then it's okay. But if management is not take any action, then communicate to TCWG. If management is correct those misstatement, then see the misstatement is actually corrected or not by applying the further procedure, etc. But if they are refuses, if management refuses to do anything, to take actions regarding the misstatement, correct for correctness of misstatement, then communicate to TCWG that management is refuses. Then finally, Essay 402, audit consideration relating to the entity using the service organization. User entity uses the work of the service organization. User auditor who obtain the understanding of the service which is outsourced. What is the nature? What is the significance of those services? How the services affect those other work? What is the control imposes by our entity to that work? Financial reporting process affected or not? Nature and material of transactions which is provided, degree of interaction between the work done by that entity and other work, none of the relation, if price control terms, etc. Audit consideration is risk of material misstatement, provide some information consideration, visit that premises, contracting with the service organization's auditor. Type 1, type 2 report. Management of service organization provide the descriptions, what controls are implemented and how work, what controls are implemented, how work is. Type 1 report. Substantive suitability of those control are also communicated, then this is in type 2 report. If sub-service organization, the auditor or sub-service organization is also already checked the control, then you can use the report of that sub-service organization, report of the auditor of that sub-service organization. Then two method to reporting, carve out method or inclusive method. If it includes the control, etc., while he is conclude his audit, then it's okay. If it's not include, then it is carve out report. Then you will apply the procedure and you will give opinion on the control. Fraud or non-compliances. This all is about essay 402. This here we complete the essay 250. Sorry, essays series on standards on auditing. 200 and 300 and 400 series. Okay, so in 15 minutes 300 is complete.